We've just heard that media, banks and commentators often get the property market wrong. Before we get into how we can actually read the market, Adam, where does people get it wrong? Where do property investors get their research and analysis wrong?
I think there's two main issues that are very easy to fall into. One is not defining your market properly, and the second is too many data points, getting overwhelmed and not knowing exactly what to look for. It's very interesting when people talk about property market, they almost always talk about it incorrectly. The Melbourne property market, the Sydney property market, the Australian property market. But there are markets within markets, and it comes down to suburb level, and even within a suburb, there's houses and there's units. So when looking at a market and trying to predict it, you need to figure out what your market is first. So that's the first challenge. The second is far out. It just seems like there's more and more data every day. So what are the data points to pay attention to? For me, supply, demand, and the trend of the two, and maybe a few other things like turnover and affordability, which feed into those two.
Yeah, there's a bit like analysis paralysis, as they call it.
Yeah.
Right? Too much data sometimes, and you don't know what to do with them. But yes, exactly right. You have to be specific with what you're looking for. Like, for example, if you want to develop townhouses in a particular suburb, you'll be looking for, okay, who are actually buying this stuff in this area? What is the predicted population growth in that target segment that is going to potentially widen your market to increase the chances of them buying your product?
So that leads me to the next question. While there is a plethora of information out there, what do you actually look for? Phil, when you're looking to do a project of your own, what do you look for?
Okay, so reliable data to tell me the market direction in that location. That's what I'm looking for. So, we've got our side where we're looking at population growth, vacancy rates, construction and infrastructure projects, economic booms, all these things. You've got that side, which is where people can go wrong because they'll hear about a hot spot. And, at any one time on one of our websites, there's 80 to 100 hotspots around Australia, and we call those growth drivers. But those growth drivers being present doesn't mean that the meaningful data stacks up to predict price growth in those locations. And most of them don't actually go to a boom, but they sound like they might. So your average investor might tune in and hear a few commentators mention Timbuktu as a hotspot, jump in there, and they're in there at the wrong time where there's a bit of oversupply of housing, not enough market demand, and then prices just trickle along or decline. Whereas they've just missed an opportunity somewhere else where the data was there to predict great growth.
The things I look for, I have a three-phased approach. It's macro, suburb, and micro. So the macro level is what's happening to the population broadly, what's happening to the city broadly, what's happening in the economy around the country broadly. Then I get down into the suburb level, which is exactly what you're saying. You look at demand, number of sales. It's also, well, what are the demographics? What do the people want? Who are the people buying? Those sorts of questions. Adam, what do you get into when you're getting down and dirty into the street level?
Well, I'm a property developer, sorry. So what I'm always aiming to do is add value to property. And it's the street level where this happens, because what I love to buy is the thing that is underpriced compared to its fundamental value. Buying a house where the house is really run down and owner-occupiers just wouldn't want to live in it. So you might find that it's priced pretty much the same as a vacant block of land. And so if that house, the structure of the house might be fine. So yeah, I wouldn't want to live in there, it's all worn out and horrible. But strip it back, keep the structure, renovate, suddenly you've made a lot of money. Or tweak the value a lot. There's other things that might indicate that there's more value here than is being priced in the market. Things like affordability is a stat that people talk about a lot. If a property is really affordable for the typical buyers, that's also an indication that maybe it's a bit cheap, or that in the future, those buyers can afford to pay more. So if all these other, the macro level, the suburb level are indicating that supply is restrictive and demand will go up, there's plenty of runway then for the price to increase.
Absolutely.
As a buyer's agent, buying for people, you buy for people who are buy and hold. What differs for you where you're on the ground selecting properties for people who want to do renovations and development?
Yeah, so we have to remember our timeframes, Brendan. So a renovation might take, on average, maybe 2-3 months. And in that time, generally there won't be tenants, so we've got their holding costs. So we need to be in a market that's rising, so it will offset those holding costs over that short-term 3 months rather than a full develop might be 2 years plus. Just like you guys, I'm targeting a house that's of lower demand, so not many people want to buy that house, and then we renovate and we take it from a low demand house to a high demand house quite quickly, and then we get loads of buyers then wanting that product, and then that lifts its value really, really nicely. As echoing the thoughts of you guys, at the development site, we've got to look long term. There's got to be sustained growth coming in that market preferably, but also just a great block that has the easements or lack of easements in the right place, the house positioned in the correct space, usually a lower demand, lower value house, and then we can see profit from that site. And we do love to see stormwater running downhill to the street, not back to the neighbour, which is always a good one.
Absolutely, yeah, correct. All right, so what we've got then is an idea of we need to be clear on who's buying from us. We need to understand the market at that level, because if we have a lot of people wanting a similar type of house in that area and we know who that is and what they like, then we are putting a product back onto the market that is in high demand. Well, where might you, Adam, find target market information, the information required for you to get what you put back onto the market?
Yeah, great question. We treat this purely as a marketing exercise, and we follow the marketing fundamentals. So what we are trying to create is an avatar for our buyer, and we need to know as much about them as we can. So a starting point would be to identify what properties are selling well. You could do that from the data just to see what properties sold really quickly and looking at what's sold recently. Then it's interview time. And this is why we really like real estate agents. They might not understand it intrinsically. You don't just ring them up and say, who's the best buyer? Just ask the question. So who bought this property? Why did they love it? What were some things they hated about it? Haven't they mentioned their job? They have kids. Maybe this is a family, they're two professionals, this starts to come out. It's not just the buyer that bought it, but everyone else that looked at it. So other questions we might ask are, was that typical for the buyers that looked, or how many offers were there? And it's an interview. You're just trying to find out as much as you can. And what you want in the end is to create a little story about who these people were. Now use your own knowledge of people and the area you're in to predict what they might want.
We've heard in this segment that you can read the market. You can actually read the market for yourself, but it does take an energy to do so. So my encouragement to you is invest the time so that you can learn what you need to in order to be able to make more money and have greater success with your property investing. In a minute, we'll come back and we'll get real with Phil Newton.